Good morning and welcome to the live stream. This is India's first live streaming channel that focuses on live trading during market hours with complete access to the trading terminal. Today is the first day that we're streaming, and we're going to quickly go over the setup. As of now, we are controlling two trading terminals. The first, which is currently on the screen, this one. The market has had better than expected opening, but quite flat. Nifty Bank and across the board, big banks like HDFC Bank and Kotak dragged the markets on Friday. And currently, Nifty is in a very consolidative position where if it breaches on the upside 11,530, it'll probably run up further. A lot of short covering that will come in, considering that this is the monthly expiry week. But at the same time, if it breaches on the downside, perhaps 11,460, you might see further shorts being built up. As of now, if you take a look at fundamentally what is driving the market, you can see that the big mover Reliance is actually below 2300, which is definitely a cause for concern because 2300 was an extremely strong support for Reliance at multiple times. But let us see if it's able to bounce back beyond that point. Our main positions currently are on Reliance and Bajaj Finance, and we have a very non-directional view wherein we have sold combinations of strangles and straddles. What we want to do is capitalize on the fact that the market does not seem to be making any big moves at this point of time. So the idea behind this channel is that we want to be as transparent as possible. You can follow our trades as and when we take them and really understand what is the thought process behind that, and also whenever it is so that we go wrong or we make our view is off, how do we come out of that trade without causing much damage, and how do we minimize our damage? How do I maximize my profit at the same time? What are the cues that we use to enter and exit trades on and off? Okay. Bajaj Finance has now broken quite a vital support, which is yesterday's low. So it's getting around there. So you have to keep in mind that this low was probably formed with that massive sell-off that we saw in the. So we're going to be retesting these levels, and in case it breaks this particular line here with considerable volume, then we might have a slight issue. Let me quickly show you. We were on the wrong screen, but yeah. So this is yesterday's low, and you can see in the midterm it has been definitely facing a lot of selling pressure. This was yesterday's Friday's low during the massive sell-off on Friday. That level is broken. We might have to make certain adjustments. Let's quickly take a look at what is our position on Bajaj Finance. The idea once again here is we want to be completely transparent with how we're approaching these trades. Currently, we've had a position on Bajaj Finance that we've held for quite long. That would have given us max profit around 3650, but right now this is where we are. We have a good amount of buffer because our downside break even is around 3,250, 283 to be precise. The break evens don't show because we have October positions and whatnot, so we're across timelines. It doesn't show us any break even here, but ideally what we will do is if Bajaj Finance breaks this support, which it looks like it is, we might have to square off the calls at the higher levels and sell them on 3,500 within the same expiry, ideally, and then consider at a later point if you want to roll it out or not. Okay. Okay, so Nifty has broken 11,500 again, and we'll have to see. I mean, a lot of the support for Nifty was coming from the IT and pharma sector. See, it's mainly, and overcorrected stocks also recovering quite a bit. I mean, this expiry looks like it's going to be once again one of those expiries wherein we close around the 11,500 mark, which it has been doing on and off for the past 4 weeks at this point. Reliance seems to be supporting the Nifty. You can see Nifty broke 11,500 and you have buying in Reliance. Reliance contributes probably about like 15-16% to Nifty. So if you want to support the Nifty, buying Reliance is a good way of doing it. Okay, Bajaj Finance has broken yesterday's low. Question is, are the volumes convincing enough? We don't know for sure yet. But we'll have to. Okay, so looks like Reliance is trying to break 2300. See what kind of resistance we face at that level. But yeah, I mean, we don't really have to be concerned. We're sitting on pretty good profit on Bajaj Finance at this point of time. Even if it were to go down to, let's say, another support, which is 3,380, definitely still profitable on the trade. So I don't want to make changes where it's not necessary. Okay, so once again, it's definitely the financials dragging down the Nifty. Seems to be a lot of new news as well about some financial fraud transactions potentially worth $2 trillion that have taken place, and there are 50 Indian companies named in that as well. And this is quite broad spectrum across the board, from people like Jindal Steel, HDFC Bank, Kotak Bank. They've not named Reliance, but they're saying one of the companies involved is a promoter in the IPL, and I can't think of really much more than Reliance. I mean, these kind of things pop up and then they eventually end up being nothing, and you have to take it with a pinch of salt. The only information is that these are potentially suspicious transactions. Okay, so there's definitely a good amount of buying back. So you can see that the lower wick went all the way to 3425, and from there there's been a considerable bounce back. So this is being bought into quite substantially. Let us see. I mean, given our position, we don't really have to be too concerned on this aspect. Let's also take a look at some of our other major positions. So another major position that we have is Reliance. Reliance basically have a spread which balances around 2300. So 2300 should be our max profit range. Because there's a future involved, I think it's about 23-25. So as we go through these series, and today being the first day, we don't have, okay. Today being the first day, we've not really gone over how these positions were built and what was the analysis, and which point were different legs added. Okay, so we're seeing some buying in Bajaj Finance now that red candle is done. Right. So this is our position on Reliance, and of course we have October positions here, so won't have a break even, but we have a break even around 2180, just drastically on the lower side. So we don't really have to do anything here. Once again, we're just waiting for decay to happen, and decay alone would give us considerable amount of it. So our per day decay is about 14,000 on this position. So 50 point up move, 50 point down move, not really of too much concern. And quite honestly, I do not see Reliance breaking, given the F and O positions on Reliance. It does not make sense for, I mean, it would be highly unlikely for Reliance to break 2200 in this week. So I don't mind sitting on this position for now. And once again, okay, so we're seeing a good amount of buying again. So Nifty is back above 7510. So currently, let's just do like a quick review of what are our positions. We have a naked put sold on Asian Paints at 1920. Currently, Asian Paints is trading at 2045. So this is gonna expire worthless. So we're gonna make like another 3 rupees here. We also have a short straddle, and I took this position like on Wednesday of last week, where I was getting a 10% up and down range on Asian Paints. Now, the audience for this channel, I presume, is others who understand what these positions are. Over the course of this channel, we are going to put out educational content that will cover what each of these instruments are, right from the basics to how do you structure them in combination with one another, and how do you sort of build out a strategy in your mind, how do you create a view, and how do you execute that view, and how do you manage that view. So all of that will be covered over a period of time, but for now I'm going to assume that anybody watching this stream understands what this means, what this call option is, what is the strike price, what is the quantity, what is the price of the premium mean, what does the LTP mean. So I'm gonna keep that in mind. So here we've taken once again a non-directional view on Asian Paints. We've sold both the call and the put for a premium of 92. Now this is currently trading at a premium of 75. Once again, this is going to decay considerably, and considering the pivots and supports and resistance of Asian Paints, this is a very good range, because on the upside you're going to have 2065, 2070 be a very strong resistance, and on the downside you have very good support at the 1960 levels. So I'm going to keep this position. It's going to give me a good amount of decay. Bajaj Finance, we reviewed a little bit earlier. Gale has a very strong support at 91. So we've sold an 85 put expiring in October. Sold it for 2 rupees 50 paisa. It's currently trading at 195. We're gonna just hold on to this and make corrections when required. There are some positions that we have here that have been corrected, so we'll look at how that was done. Okay, for example, HDFC was a position that has been corrected considerably. Our initial position in HDFC was, we said we will buy HDFC shares at 1800, but HDFC started crashing. So we had to sell calls. We sold calls at 1850. We sold calls at 1900. This is to recover the loss that was being made by the 1800 put. Now, I really like HDFC shares, so I think it's definitely easily one of the best lenders in our country, and which is why we've further compounded our position by selling additional puts in October as well as in September. So had we left it at this, we would have been in a net loss on the position, but because we covered it slightly, covered the downside slightly, not completely, by selling these calls, we are actually making a decent profit on the position. Once again, HDFC Bank, it's just, I want to purchase shares cheaper than what the price is currently, so we've sold naked puts, and those positions are doing all right. Same with Hindustan Unilever. So whenever you see a put and nothing else, it essentially means I want to buy these shares. That's why I've sold a put option. So I've collected premium. If my price target hits, I'm going to buy those shares. If my price target does not hit, I'm going to keep the premium. So it's essentially a cash covered put. Um, okay, ITC is again once again really interesting. So we started out initially on ITC by selling the 195 put. Now ITC has crashed a tremendous amount from the beginning of this month, where it was at 200 to currently trading below 180. There's a 10% drop. But in the meantime, to ensure that we take advantage of the fact that the price is falling and we don't buy the shares at very expensive values, we've sold calls. So we've sold the 200 call, we've sold the 190 call, sold the 185 call. So you have to keep in mind we have sold calls which are below the put that we've sold, because that's how we cover our risk. Because by the time it falls 5%, this 200 has no value left in it. It's about 15 paisa. Might as well square it off today, which is probably what I will do. So if you look at the overall position of ITC, yes, we are making a loss on it, but we're making a considerably lesser loss than what we would have had we not sold these additional calls. These calls are drastically reducing our loss. We also had 205 call, which we squared off on Friday. So, I mean, this is how you protect a losing position. Depending on your view. Now, my idea is I'm actually going to take delivery of 2 lots of these ITC puts, and then I'm going to keep those shares and sell calls on them. And I would want those calls also to not go into the money, because ITC is one of the core shares in my portfolio, in my investment portfolio, which is why I will just hold on to them and try to still make a little bit of interest income, more or less, through selling calls. But Larsen, very similar. Larsen, we sold a naked put, started making a loss, so we sold some calls to take back a little additional money. So had we not sold the calls, would have been at a 15,000 loss. We sold the calls, we're not such a bad position anymore. Muthoot Finance cash covered put. Now here is my nifty position, and this is for October. So I was getting an up and down premium value of close to for this short straddle, I was getting about 700 rupees, which means my break even in October would be 10,800 and 12,200, which I thought was a very good risk reward ratio, considering how in the short term we seem to be in a very consolidative pattern. Okay, looks like Bajaj is tanking big time. Hmm. So what we can do here is potentially what we can do here is potentially sell the Bajaj Finance future. That would limit our downside risk. Question is, do we want to do it right now? I mean, so we could do it at a point where it is breaching our break even or getting close to our break even. We don't have to do it right off. Also, I don't like to take trades in the first half an hour of markets opening. Um, just the volatility, it's very random. If you look at the hourly chart volumes, I don't know, this is not convincing. Hourly charts, yeah. So the hourly volumes are really not that good. We're going to choose to not do anything. See where is. Okay, so we're just going to take advantage of the fact that we have a good buffer on the trade, and sometimes the best thing to do is not do anything. Now, if I were to sell the future here and it bounces back, I basically screwed myself. And yeah, okay. Okay, so the plan is going to be quite simple. We're going to wait and watch, probably at this point. Bajaj Finance breaks 3,400. We will move down our calls. So we'll sell the 3,500 calls. That seems to be the best possible outcome here. I mean, in with the kind of volatility that we're seeing in financials in the past few days, short. Okay, so yeah, Reliance is really supporting the market at this point. And that 11.5 being held is happening due to Reliance. And of course, banks are in the same trend that they've been in for a while. I don't know. I mean, a school of thought could be, given the weakness in the bank nifty, 2,200 broken, which is a very strong support. Why not short? Reason for this is banks have fallen about like 8% in the last month, and you've seen considerable weakness. Now, how much longer is that weakness going to stay? That's anybody's guess. But the risk reward at this point of time is not as conducive to go short here, or to go short on any of the financials for that matter, because at the end of the day, all of this interest on interest is going to get cleared out, and then you're going to see a big jump. And so the potential downside to going short in this market is much higher than the potential upside. So this is more or less a waiting watch game. But as I was going over some of the other positions, there's really not much to be done here, because everything is well within its range and it's all positionally covered. The only thing that's concerning me right now is Bajaj Finance. Let me see what we do here. So as I said, we'll sell the 3,500 call if it breaches 3,400. And right now, if you look at volumes, and it should be more visible on an hourly chart. It's not convincing. The volumes are not convincing. Okay, looks like a breakdown, but I mean, I don't know. They're really not very convincing. I feel like this 3,400 should be strong enough support. Anyway, I mean, that's the idea here, but regardless, if this 3400 is broken, we will sell 3500 calls. Taken. I mean, our downside break even is around here, 3280 is where our that. That's a long way to go, and yeah, we have that freedom of having being able to wait. That's the beauty of taking like long-term positional views in like monthly or the next month's expiries. You have a lot of time, and just time decay alone gives you a lot of breathing room. Now, okay, so here's the thing. So we have two trading terminals. This is terminal 1 and this is terminal 2. Now, more or less, most of the positions that I went over on terminal 1 are exactly the same as the ones on terminal 2. It just happens that I have capital allocated in different accounts, and if I were to have drastically different positions, it will be harder to manage. But you can see that there's a few differences here. We have positions on ICICI Bank, which we don't have on terminal 1, and L&T Housing Finance. I really like this share, and probably will buy it in cash at some point, but I've been selling puts to try and get this share. So far, nothing that's gone in the money. One of the big position that we have here is a position on Bharti Airtel. So Bharti Airtel position. This put is in the money, so we sold this call on Friday to sort of cover this put slightly. Hmm. Okay, I'm going to be right back. Give me a moment. Okay, so selling the call. Also, let's take a look at the health of some of these calls. Okay, so as you can see, this is actually not representing the correct image. The current bid is around 280 and current offer is around 320. The LTP is far lower than either of those. So the fact that Bajaj Finance is crashing 3%, taking a big hit on our book. Now the question is, do we lock in our profit by selling the future or not? Very drastic on the 5-minute chart. Clearly, the support of 3,430 has been broken quite considerably. Seems to be some buying happening here. Once again, if you look at our break even, our break even on Bajaj Finance is around, at expiry, is around 3280 roughly expiry. So it's still well within our range, and currently if it bounced back from 3385. It'll be interesting to see if it crosses the psychological mark of 3400. As of now, we're still doing quite well on the trade, so this is where we are around here. Ideally, the trade makes most money if Bajaj Finance runs up, but considering how weak financials are, seems very unlikely. So what we're going to do is we're going to wait and see what happens as the morning volatility cools off, and if it does look at any point that it's going to breach a break even, we'll sell the future, and by selling the future we ensure that whatever loss we make on our existing positions we recover in terms of the profit that we'll make on the future sold. I've also placed an order to sell another call at 3,500. Oh, okay, the position has been executed. So this position has been executed. 3,500 has been very strong resistance for Bajaj Finance. So you can see here multiple points. you have had like attempts to breach, somehow gets thrown below again. It should be quite a safe point to sell calls, and considering this is expiring in 3 days, not much of a risk. And also, if this call were to make a loss, that would be ideal for me, because this is one call. Yeah. Okay, so generally, as a rule of thumb, okay, so now we have Bajaj Finance breaking above 3,500 again. The volumes of the sell-off weren't that great either. This call making a loss for us is a good thing. Like, we want to make, generally whenever you make adjustments, you want to lose money on the adjustment, provided the adjustment is done right, because that means that your original position, which is a bigger position, is making a profit. So the idea should always be get your adjustments to protect your risk, and if they're protecting your risk, they have to be contrarian to what your initial position is. Otherwise, you're just compounding your risk. And at this point, yeah, this is going to make a loss as it goes higher, but of course the strike price has not been hit, and you'll see that what this will lead to is this position making more of a profit. What we want is exactly that. We want this position to make a profit. And also, once again, you can see there will be liquidity issues in this. So look at the depth. 250 is the bid, 280 is the ask. Okay, fair enough. It's somewhere in between. Okay, Krishna, you're here. Basically, let me give you a quick walkthrough of what exactly the setup is. The idea is there is not a single channel out there currently which does live trading during market hours with a clear view of the terminal and the exact positions that are taken and when they're taken, why they're taken, what are the adjustments done to those positions. So what we want to do is like bring in complete transparency into this by so the setup is essentially we're working with two terminals. This is terminal 1 and this is terminal 2, and of course we have our setup with what are the, oh okay, so Reliance is now breaking out on the upside. Currently there seems to be quite a bit of buying on the Nifty. The volumes are really low, so you can see that the volumes are below average, so you know that this rally is not really being led by some massive projects. But the idea is, so we have two terminals. This is terminal 1 and terminal 2, and we have our trading setup. We want to do this, and along with this, like put out all kinds of educational content. Two streams. One would be the trading stream, and the other would be your investing stream. So we're slowly going to put out content, and everything is going to be free. There's going to be no paywall. We're not selling any workshops. We're not selling any courses. And you know, to show the kind of credibility we have, we're going to put everything out there in saying that these are our positions, this is why we've taken them, and this is how we will manage them at every expiry. So currently, earlier I had summarized what are our positions and what is the idea behind them, but more or less summary right now is we're basically going to do nothing. We don't need to make any adjustments to any of the open positions that we have. Most of them are well within what we want it to be it the Asian Paint short straddle, be it the Bajaj Finance spread, where we have a lower break even of 3283, which seems to be comfortably quite far away from where we are currently. The cash covered ports spread on HDFC. So all of these are break evens are very, very far apart. So you see Bajaj Finance, we've still got a long way to go before our break even is hit. Bajaj Finance is around here currently. And similarly with Reliance, well within our range, exactly in the range that we want it to be. um, HDFC not so much, but the idea behind HDFC is if it does breach our break even, which is around 1690 if I'm not wrong, um, then we'll buy HDFC. Okay, awesome. I'm glad the audio works fine. So um, is there anything that immediately pops out in terms of the visuals? Are the visuals clear? And um, like, is there anything that can be done to like make this better and like easier to watch? Like, should the camera be on the left? Should it be on the right? Should it be on the top? Okay, Reliance is seeing some kind of big buying, and suddenly the volumes are picking up as well. I mean, this is really good for me, more or less, because on Reliance, our view is that I mean, so our view is that it'll expire between 2300 and 2400. So in this range, it's doing really well for us. 1 second. Yeah. Oh, thank you. I didn't realize that. This mute button, you need to press and hold it for a couple of seconds for it to mute unmute. What I was saying is when the market opened, Dow futures were down like 30 points. Now they're down close to 250 points. But then our market hasn't really reacted to that. Then again, like US futures volumes are relatively lower before like 12:30. After 12:30, once the European markets open, you see much more increase in these futures being traded volume wise. So interesting. So since the Indian markets open, the Dow is close to being down an additional 220 points, but that is not affecting us much. And there seems to be some sort of strength in Reliance. but it's definitely being sold into. Once again, like the weakness is coming from financials, but suddenly there is in a decent amount of buying. Like HDFC Bank is up close to 1%. Looks like one of those markets where it's just going to cruise to expiry plus minus 50 points from 11,500. It doesn't seem to be any drastic event that's going to come up. There's this new news, I don't know if you've read about it. Indian Express has put out that an American body has found close to $2 trillion worth of suspicious transactions that have taken place. And there are a lot of Indian companies being named, some of the biggest, from Kotak to HDFC. And they're not taking Reliance by name, they're saying one of the largest conglomerates that also is a promoter in an IPL team. So I'm guessing Reliance. Um, but I don't know, that this could just be like rumors and unsubstantiated. But it is the Indian Express, is a very reliable source. But they're quoting other sources, so you can't be too sure about what. In terms of positions that one could take in this market, so basically about $2 trillion worth of suspicious transactions which seem to be unsubstantiated by relevant documentation, especially from India to the Middle East through different potentially shell companies, has taken place, wherein they're just transferring unsubstantiated amounts of money to companies that seem a little shady. And this was facilitated by a lot of the bigger banks. So they haven't given too much detail, but they've named a bunch of companies, and they were also indirectly suggesting that the revenues and the profitability of some companies, especially Jindal Steel. Jindal Steel seems to be at the top of this controversy. Let's take a quick look at what Jindal Steel is trading at. Um, yeah, so the stock is down like considerable amount, close to 7% on that news. But to be fair, the stock, I bought Jindal Steel at like 95. I sold it around 170 because I doubled my money in like a month. But if you see year to date post corona crash, so I bought it around here like 94, 95. I sold it here as it continued to run up because of global steel prices going up. And yeah, after this news, it would. I'm surprised it's only down 6%, 7%. Figured it would be more than that. I mean, it should be more than that. Okay, so market is perfectly flat. This is actually surprisingly better than what global cues were showing. SGX Nifty was showing like a gap down of like 35, 40 points. Actually up about 20 points. Could be due to the expiry. I mean, we don't know. We could also see a big sell-off like we've been seeing post 12 o'clock, and suddenly everyone's just deciding to dump. Let's take a look at how institutions are positioning themselves for this expiry. Hmm. So I'm guessing the calls at 12,000 are being unwound and probably compounded at 11.5, 11.6. There's a good amount of call build up. And if you look at the overall, I mean, the put call ratio at the strike price seems ridiculously even. Like The max pain, I guess if you were to say max pain is only as valuable as the open interest at the max pain, this is quite a substantial amount. So looks almost like going to be a perfect finish between maybe plus 50 minus 50 from here. Okay, and there's a decrease in futures OI as well. Just take a look at how so the maximum open interest is 11.7. So that seems to be like the upper limit for this week's expiry. You have 10.9 on the put side being maxes, so potentially quite a bit of downside that people are considering. But yeah, the open interest seems to suggest that the upside, we can assume that 11.7 is definitely not going to breach the way things are poised, and there is no potential good news also that one can expect, because the biggest drag is definitely the bank nifty, and the bank nifty, there's going to be no great news coming out for banks anytime this week, and until some of the things are clarified, interest on interest, we're not going to see any big run up. And how much further can IT, like IT is at an all-time high, IT index, pharma is at an all-time high, Reliance is at an all-time high. You can't have higher moves on nifty being carried by the same leaders. Financials have to pick up, otherwise nifty will not go up quite. I mean, they have to do their part. They've gone Nifty Bank being down 8% in a month. If Nifty Bank doesn't recover, it's unlikely that financials and pharma is going to run. Sorry, Reliance Pharma and IT is going to run forever. This is current OI as on September 21st. If you look at monthly, I mean, monthly, weekly will be the same. This week it's the same. But what's surprising is that 11.5 is seen even in today's change in OI. A lot of OI is building up on the 11 side at 11.5. So there is some kind of support, but definitely the call side is far more substantial. Okay, I'm going to be right back. Thank you. Call na. Bag manage. Close my door, na. So something I'm considering right now is buying the Bank Nifty future for October. I don't know. The value proposition is pretty good. Now, how much the risk reward is pretty decent. The potential upside is definitely higher than the potential downside. But I'm gonna wait till the end of the day. Today, there's only one position that we have taken. We've shorted the 3,500 call of Bajaj Finance. And ideally, we want this position to make a loss. Means our other positions are making money. Okay, so the interest on interest hearing is actually on Monday, apparently, not on Thursday anymore. They've pushed it to Monday. And like knowing the Supreme Court at this point, like you can by default assume that any timeline that they give is going to be postponed because they quite simply don't have um, the immediate expertise to take decisions on things. So there will be constant deference happening. So we were definitely right about this Reliance breakout not being a legitimate breakout. The volumes were just unsubstantiated. And given the bad news looming about a potential money laundering issue that might come up with the new report by the Indian Express, unlikely to see too much of an up. So looking good to stay in our range now. Okay, so considering this is the first stream I'm doing, Krishna, give me like a couple of pointers on what is good about the setup and what can be like improved in your opinion, like what you feel like will enhance the viewability of it. Of course, the content side, what we will do is we'll stream for like an hour when market opens and probably an hour post lunch and towards the closing. But what can be done to sort of enhance the overall viewing experience? Like, I mean, is the black theme good? Should we go with the white theme? Is that easier on the eyes? What can be done? Title needs to be more clickbaity. Yeah, I think that's primarily what we're trying to avoid. But yeah, I guess initially we'll have to do that to get like the first few people on board. Discoverability will certainly be an issue, but I feel like if eventually the content is good, then people will find ways and means of getting there. Also, I'll share like the fact that this is being done on a few forums, like discussion forums, Reddit and stuff. See what happens there. Yeah, like Reddit and Quora, perhaps. So even on investing.com, there are discussion forums where they talk about Nifty and stuff. Okay, let me do that right now, actually. And not much seems to be happening at this point of time anyway. We're stuck at plus 0.2% on the Nifty and minus 0.4% on Bank Nifty. What's surprising is the weekend decay didn't seem to happen at all. Like, not sure about that. Hmm. What are your open positions at this point of time? Do you have any open positions for this week? Yeah, so I mean, this is the trading terminal, and this is generally other data points and also the second terminal. And then we have this, which is okay, what am I viewing currently? Because if you look at all my positions, right, like all of them, none of them are even remotely in need of management, like cash outputs and that. The only two that are in any need of management, potential management, are Reliance and Bajaj Finance. So considering that nothing else needs to be done, I don't need to really track anything else. So this is what I'm tracking. I'm just tracking global indices. The other positions that I have that might need active management is I have like a bull put spread. I've sold the 11,300 and bought the 11,250. Somehow I'm thinking I might close this towards the end of today. Let me see. Also, I have this short straddle on Nifty in October, which I sold for 700. Right, so this is doing quite well on both legs. And so once again, not really much active management needed, because it seems to me that Nifty doesn't want to move more than 20 points up and down from here. But this is making it. So I mean, Reliance, Bajaj Finance, and Nifty. So what I'm trying to do, yeah. So the idea is there'll be um, two content lines altogether, which are obviously very different, right? So you have the trading side and the investing side. So we're going to put out from the basics in everything, right? So investing, what is investing, why do you invest, right? How do you invest, what are the different asset classes, all of that. How do you analyze a company, how do you analyze an industry, how do you look at what are the other peers doing, what are global implications for that, what is their business model. So all of that would be on the investing stream, and I'll put out like small videos that people can watch, and that's also a way of like appealing to a certain segment which isn't excuse me, actively in the market. And on the other side you have the trading part. So how do you get into trading, what are the different instruments through which you can trade. So once again, that'll be an educational content pool. Now this live stream is to really, I mean, the core of it is the live stream, because we want to be as transparent as possible. And rather than saying, oh, you could have bought this or you could have sold this at this point of time, we want to be like very upfront and saying this is what we bought, this is what we sold, this is how we did it, right? And we're doing it live in the market. So I'm not getting to patch it up at a different point of time and sell you a story, right? that had you been a part of my WhatsApp group, which you can pay for, then you would have got this tip. Like, we're not trying to sell anything. This content is going to be completely free and no paywalls at all. Yeah, that's like a pretty good position you have there, like 11,300 put and 800 call short. But if anything, given the situation now, like, I would be more concerned on the downside. But the fact that the Dow has fallen additional 280 points since it's open, and Nifty somehow is trading above what the futures indicated pre-open, I feel like certainly there's something being done to hold up the Nifty, or maybe it's oversold to a point wherein nobody wants to sell anymore. Also, there were a lot of long positions built up in the future segment by FIIs, and a lot of call unwinding that took place on Friday when that steep fall happened. So I don't know, 11,400 seems to be a point that will not be breached. Let's just take a quick look. Yeah, seems very unlikely. Yeah, but you never know, anything can happen. But if there is any further correction, I would think it would probably happen on IT or Reliance, probably, or pharma. Like the pharma, and it's there. You can say they're very much overbought. You had stocks like Lupin jump up 15% in a month, so a good chance that they come back down. But how much further can you beat up the bank Nifty? At what point is it just the potential downside reward isn't really much? So I mean, I think the risk reward and something like buying a 23,000 call on the bank Nifty expiring October is really, really good at this point of time. Like, I am considering buying the future, but I'm gonna wait till the end of the day and then take a call. There isn't any substantial news coming out on the bank Nifty yet, so it doesn't have to. You don't have to rush into anything, but the risk reward on going long in the bank Nifty right now is very good. You have to be greedy when everyone's fearful, and it's almost certain that the interest on interest will not have to be borne by the banks. If anything, the government will have to bear it, and the government certainly will say no. So quite comfortable. So on trading terminal 1, we don't have any bank Nifty positions, but we're actually long a lot of financials. So this HDFC split that we have, as I'd gone over it before, we make max profit if HDFC goes up. Same with Bajaj Finance. So this is the Bajaj Finance position. We are technically long right now. So if you see our Greeks, we have a delta of 779. We are long Bajaj Finance. We are long HDFC as well. The HDFC is almost at a point wherein it's breaching our lower break even, but not quite. HDFC, okay, 30, 17, 30. So we are long. We make money when these go up. So I don't want to further compound that by buying a October call or longing a future. Then I'll be compounding my risk because I'm already long a lot of financials. So I don't want to expose myself too much in case something out of the ordinary happens. But yeah, so we are long financials, definitely. Just see what are the other financials that we're long. We're also long SBI. Don't think it's on this terminal. Okay, so we are long SBI here. So we've sold the 190 put and SBI seems to have tanked today again. Like, at what point is there tremendous value in buying SBI 190? Um, Loan book of 40 lakh crores, for crying out loud. So yeah, I'm happy to take delivery of these 3,000 shares and get an additional 7. My effective buying price will be 82 rupees 30 paisa. I'm very happy. So I'm gonna just hold on to this. Um, Now see, in this case, I will not sell calls to defend my put yet. I might convert this into a short straddle, but not yet. I need SBI to break multiple supports, and right now 190 is a very strong support before I take a corrective action like that. But most of those corrective actions are just to reduce my buying price. The problem with selling a call too early and at a point wherein a support hasn't been breached well enough is that then your upside risk, which you previously didn't have and your initial view was going long, is now what is causing you to lose money. So if anything, if I was not already so exposed to financials, I would sell a 185 put or 180 put expiring in October. And yeah, the risk reward on financials is good. Okay, so as far as the markets are concerned, there is literally nothing happening. Nifty is moving up by 20 points and moving down by 20 points and staying at 11.5. And Bank Nifty is just going um, slightly above 22,000 and slightly below, maybe 40 points or so. So, as primarily an option seller in a market like this, there's really not much to do. You just sit back and let the time decay happen, and you eat premium. I mean, the only thing is, if you are largely exposed to some position, you still need to monitor it actively. Like, for example, here on Bajaj Finance, my break even is just about 150 points below where it's currently trading. Not even 100, 130 points. So I need to ensure that I take corrective action before that break even is hit in case there's a rapid downside to it. Now there are a few things I can do. I can counter the position by selling more calls in the same expiry, or I can roll out some of those puts to the next expiry. And given that there is some good news in the cards for financials in the midterm, those rolled out puts should turn a profit. I mean, regardless, I mean, if you see, the volumes are really not that high. Like, okay, on a 5 minute, say on a 1 hour time. Not convincing. There's not much happening. This is just an accumulation distribution situation, and also a lot of uncertainty. So people don't want to take bigger sizing. To the other okay, so this was today's okay, see what so if 11,480 roughly is broken, that could potentially see more downside all the way to 11,450. um But what's really comforting if you're long in this market, like overall long in this market, is that Reliance is about 2,300. And unless Reliance convincingly with high volume breaks 2,300, you can be assured that Nifty will not tank. And by tank, I mean it's not going to fall 100 points. It might fall 100 points intraday, but probably recover like what happened on Friday. As long as this Reliance level is respected, this 2,300 psychological level has been extremely consistent. You can say 1, 2, 3, 4, 5, 6. I mean, innumerable amount of times you've seen Reliance just bounces off that, and even if it does breach, it comes back up. So as long as Mukesh Bhai is holding up the market, yeah. Yeah, ITC, that's the thing, right? So if you see my ITC position, I've not done any fixing beyond what fixing has already been done. So if you see here, I'd sold puts at different points. I'd sold the 195 put, I'd sold the 180 put, 170 put, but I also sold calls. Yeah, come. Right, so currently this position is definitely making a loss, but the fact that I sold calls um, saved me to a certain extent. Now my plan is I'm not going to do anything to fix this break even. If ITC goes below, I'm going to just take delivery of those shares. I'm going to buy ITC and I'm going to add that to my portfolio holding. Like, it's a ridiculously good company being priced like really badly. So okay, I get it, you don't want to give a premium to tobacco, but if you look at what happened historically with tobacco companies like Philip Morris, right? So their valuation was also beaten up, and they came to a valuation of about 13, 14, but now they're trading at a valuation about 20 times price earning. So I feel like it's a sleeping giant and it's gone into a deep slumber, and wake up and it'll jump up about 200 in like a midterm. Give it a few months, easily you're going to break that 200 barrier. It's just a matter of time, which is why I'm not bothering too much with the ITC position. I'm not going to monitor it much either. If ITC goes up, I make money, yes. If it goes down, I lose money, but then technically I'm going to buy those shares, so not much of a issue there. They give a 5% dividend, for crying out loud. So what more do you want from a company? Let's look at the ITC. Right, so the low in the recent past, somewhere still around 177. Definitely in a downtrend. You can see for it. A very clear downtrend. Right, no doubt about it. Lower highs, lower lows. Definitely in a downtrend. But here you want to be more fundamental about the company than technical. Like, forget the lines. I mean, forget the trend lines, even then it's very visibly in a downtrend. But what you're playing for is the bounce back. and the bounce back will come on fundamentals. Yeah, but this is it's too good a company for it to be valued the way it is. They're just waiting now for when that turnaround happens, and when it happens, it'll happen big. So good point to accumulate. Most certainly should buy ITC. I have an ITC position on this terminal as well. You can see clearly, right? So here, by selling the 195 put, by selling the 190 put, I'm making a loss. Had I not adjusted this, and I booked the profit on the 200 call, I booked around 12,000 on the 200 call. I sold the 195 call. I sold a call lower than the put that I've sold, and I've sold a 185 call as well, which is lower than both the puts. So I have two puts in the money, and I've sold two calls at 85, which is drastically at a lower strike than. That's because I'm trying to reduce my cost on the share itself. But yeah, I will buy these shares. So I will either go long in futures at some point, or I'll actually buy the shares. One of those two things will happen. Yeah, so ITC has been downgraded by a lot of your banks. Let me just look that up real quick. So ITC, because of environmental norms, um, seems so brokerage downgrade due to some environmental norms. So most of these international investment banks have like a negative view on ITC. And of course, as we know, they're obviously always right. That was sarcastic, so. See, so yeah, but from like a value investing point of view, I don't see any company out there with better value than ITC, at least in the Nifty companies at this point of time. Now, what's like really surprising is that cigarette companies get really shitty valuations, even though they generate the maximum amount of free cash flow. Whereas alcohol companies get valued at 110 times, 120 times. So if you look at what if you look at like the valuations that alcohol companies trade at, it's ridiculous. Price earnings of UB is 181. The UB is trading at 181. alcohol and cigarettes kind of go hand in hand. Okay, I get it. Alcohol is not as frowned upon as cigarettes are, but 181 times, something like UB, and ITC trades at like 14. So, would you rather buy UB at this valuation or buy ITC? Yes, I'm personally biased on ITC because I hold ITC shares, but regardless, it doesn't change the fact that quite simply right now ITC is a much better buy. Okay, so here's another interesting thing that I missed out. HUL is down 2.5% today. Wow, that is that is something. Well, I mean, they did come out and say that the demand that was there for their products during COVID was just really better than what they could have expected, and that it's not sustainable. But so when they did come out with the guidance for like future growth to not be as good as what it was, I'm surprised though. 2100 was very strong support for HUL. I mean 2100. So it's broken S1, S2, S3 on the pivot chart. Oh wow. Okay. I mean obviously a downtrend, but this is definitely oversold. On the 5-minute chart, RSI is at about 15. RSI on a 1-hour chart is also at 15. Okay, so it is extremely oversold. Be interesting to see what acts as a support. Like the next support is 2000, very close to 2000, 2050 in the past. Okay, close enough. Yeah, fair enough. 2050 is a pretty decent support. It'll be interesting to see. And this is actually quite high volume. This sell-off is very high volume. Okay, so what I'm going to do here is, since I have an in the money put on HUL, I'm going to sell a September call of hardly worth anything. 7 rupees. Okay, so I have an in the money put on Hindustan Unilever, which I sold for 25 rupees. I'm currently making quite a substantial loss on it. Okay, let me sell this. Hmm. Okay. It's a present. Yeah, exactly. So, I mean, look, ITC is classic. FMCG companies do well, ITC doesn't do well. Tobacco companies do well, ITC doesn't do well. Hotel companies do well, ITC doesn't do well. At some point, people be like, okay, this literally their cash holdings and their assets are worth tremendous amount of money. And yeah, okay, tobacco might be a dying industry, but if you look at like formal tobacco penetration is less than 10% in our country, that's going to pick up, because eventually you would assume that on a long enough time frame, doing this illegal import of by smuggling in tobacco goods and all that will come down. It will be better regulated. So ITC stands to benefit from that. They have a complete monopoly. This complete entry barrier. Nobody else can even enter that market. They have a complete stranglehold on the market. I see no reason why that doesn't stay exactly where it is. So yeah. So my order on Hindustan Unilever is not getting executed because Hindustan Unilever just wants to. Okay, so you are seeing support. This volume of selling off was huge, 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 huge. Now seeing some pullback. So the day's low you can consider 146. We should move up the price. Okay, the order got executed. Never mind. It's okay. Like even if this Hindustan Unilever call makes a loss right now, it's still out of the money, and I have an in the money put, so it's fine that I'm increasing my buffer by 7. Just you want to manage that kind of risk. ITC, like if anybody told me which stock can I buy today, buy ITC. And like HDFC, the parent company, like home loans, that's like the last kind of loan that anybody defaults on, because people are very scared of losing their homes. They might not pay their EMI to on the fridge that they bought or the bike that they bought, but they certainly will play their home loans with. They'll be scared of losing their houses. Okay, so apart from that, it's 7,490. Reliance, of course, holding everything up 0.5%, but barely 16 rupees away from this massive pivot of 2,300. Does not want to move from there. People are not letting it move. That works out really well for me, so can't complain. Bharti Airtel is down considerably. Well, it was up considerably on Friday, so not the worst possible outcome. 2.5% down on Bharti Airtel. Banks getting beaten up. ICICI Bank down 2%. Well, pharma was looking good in the morning, but now suddenly pharma not doing that great either. We have Sun Pharma down about 1.5%. SBI holding like really strong on at 190 support. I think I think this is a very attractive price by HDFC. Like if mid to long term HDFC parent 100%, you want to buy that. Axis Kotak, honestly, I think they're still overpriced. Um, no point there. But oh, Larsen has broken a very vital support of 900. Larsen was stuck between that 900 to 1000 range for a very long time, and now Larsen has broken that. Okay, which is why my put here is getting screwed. What I can do is I will square this up. What is this new interface? Regular. Where is my buy that tag? And then we'll shift that lower. We'll sell a 920 call on Larsen. Okay, now what we want to do is sell this. Okay, cool. We've sold an additional call on Larsen. Gives us another 4 rupees 30 paisa on the downside. So this is actually not so bad at all. Like, so we've booked 5,000 profit on one of the calls we sold earlier. I previously booked profit on a higher call sold. So now we have this put making us a loss, and we have this call which will continue to make us some money. This call, two calls, one put, all of which we are short. I don't know, every time there seems to be some kind of a pullback happening in financials, immediately sold into. Like, this zero doubt about it. You see some buying and bam. I think 11.5 is going to be like a photo finish this expiry. Very unlikely that goes anywhere apart from. So I mean, currently the position that we have on Reliance, we are not going to make any changes to it because our break evens are almost, it's like a picture finish for us. We make, well, the expiry is in 3 days. We make more or less the same profit between 2,300 and 2,400. And Reliance doesn't look like it wants to go anywhere beyond that range. Seems to be very good support at like 2280. Pretty decent resistance at high levels of 2350. I'm just going to sit on this position. We have sold calls on Larsen to protect our put that is making a loss. 940. I don't know, Larsen seems to be like directionless stock these days. Market goes up, it goes up a little bit. Some news on defense or infrastructure or something comes out, it goes up a little bit. It's sold into, it's back in the same range, 900, 1000. Today, it's convincingly broken down from that range. Currently, 8. Oh, 890 has been breached as well. 890. Okay, I'm gonna be right back. Okay, we're back. Hmm. So far, everything seems to be going all right. We are more or less protected in our positions. We don't have anything to be concerned about except for Bajaj Finance. Our break even is 3,280. So we want to potentially completely cover that position by shorting the futures if Bajaj Finance breaks a few more pivotal levels. But this seems to be a good pullback. So what's visible here seems to have bounced off this level is 3,385, which has acted as a support in the past. You can see has come to this level and then seen a big jump up from here. Also, the volumes of today's selling are just not that convincing, so I'm going to retain my overall long position. Now you can see it's sort of trying to break the VWAP. If it breaks the VWAP, you can look at a convincing enough rally back to 470, 480 levels. It's more about what does the broader financials market do, because broader financials market is beaten the life out of it. So Reliance doing what Reliance does, just hanging out around 2,300. That is our most profitable position currently of the rest. So among everything, Reliance is definitely our most profitable position. Interestingly, this Reliance position was initially a short straddle at 2100, but when it broke out, we were able to catch the breakout. So we hedged our calls by buying the future. So this future that we bought really saved us on that. And then we readjusted by selling additional calls at 2400 and 2500. We sold some additional puts at 2120, 1900. I mean, if you're looking at Nifty, if you have positions on Nifty, it's really important to look at what Reliance is doing. Because if Reliance is supported by certain levels, you can rest assured, you can be confident that you can't see a big move in Nifty without a big move in Reliance. Definitely something to keep an eye on. Hmm. If we do nothing and the market continues to do what it's doing, we're going to earn a DK of 45,000. It stays where it is and nothing else happens. We make a DK of 45,000 on this account, and then we make an additional DK 71,000. So we make a DK of close to 1,15,000 just by doing nothing, by just sitting on the positions we are sitting on. So we're not actively trying to do anything. We're just trying to let our positions decay and make more money for us, as long as things stay within our break even. There are two exceptions to this. One is a Larsen and one is ITC, where it's breaking our downside break even. And we've sold enough calls to reduce the cost of the puts that we've sold that are in the money. But beyond this, we really don't want to do anything more. We'll take delivery of ITC shares. We will hold ITC shares and sell calls on them. Sell calls. VIX is just about at that 20 mark. We sold this October short straddle on the Nifty. This one we sold this at a point when VIX was like 23. That was when that sudden fall happened. So just from decay in VIX, in the implied volatility, we're doing quite well on that position. So we have a bull put spread. This potentially we will square off towards the end of today. It's expiring on Thursday. There seems to be like a lot of downside bias in the market, although it doesn't seem convincing because it's just the financials that are falling and everything else is making new lifetime highs. Nothing to be very concerned about. Okay, so I think that's more or less like morning volatility settled down. We will be live again at 2 o'clock, just post lunch, to review what exactly has happened since the morning session. And yeah, we'll pick it up from there. See you guys at 2 o'clock. And I have 5 concurrent viewers. That feels great. I figured I would have 0 viewers or 1 viewer, somebody that I forced to watch. But I look forward to seeing some of you again at 2 o'clock. All right, have a great trading day. Not much happening in the market. So final conclusion is this week's expiry definitely going to be below 11,700 unless financials really pick up the slack. But if there doesn't seem to be much news coming out, you might have short covering. Short covering might take you up to 11.7, but definitely not below that. On the downside, I'd say 11.2 is a strong support, but 10.9 seems to be like the maximum open interest. So, in a really bad scenario, if the leaders, which is Pharma, IT, and Reliance at this point, give way, then 10.9 is definitely on the cards. So, going to be an interesting expiry. We'll catch up at 2 o'clock and see where it goes from there. Thank you all for joining in, whoever did. And please look forward to an abundance of educational content that's going to come out, both in the form of an investor category as well as a trading category. Everything is going to be completely free. There's going to be no paywall. We're not selling any webinars. We are not selling any kind of workshop that we want you to attend. This channel is always going to remain completely free. All the knowledge, all the content is going to remain absolutely free. And to show our credibility, we're going to be live every day during the market hours, showing you what positions we have taken and what we do when they work and what we do when they don't work. How do we fix them? How do we come out in such a way that when we make a profit, we make a very good profit, and when we make a loss, we manage our risk? Because at the end of the day, risk management and minimizing any potential damage to the kind of capital that you've involved is absolutely essential for long-term sustainability. So we're not going to show you how to make double your money in a month. We'll show you how you can potentially make 5, 10, and in certain situations, circumstantially more than that, and sort of consistently manage both your investing portfolio as well as your trading portfolio. So thank you all for the 5 viewers who did join in, and hope to see you at 2 o'clock.